Hi, good evening. This is Scott at Scott Trades on Twitter with StockMarketMentor.com and your chart of the day. I want to show you two charts that I look at before wading into the waters of risk in this market. Now, as you know, the market has been brutal. Here on the SPY, we're back down to the June lows. Now, whether or not the June lows hold is up for debate. We haven't figured that out yet, but it's definitely an important area. But before I kind of get into trading, there's two charts that I like to look at just to see if I'm on the right side of risk. One of those charts is the US dollar. Now, the US dollar has been called a wrecking ball because the stronger it gets, the weaker a lot of risk assets get. And we've seen that here just on the chart as the US dollar's been in a really strong uptrend all year, and the SPY and the Qs have been in a really strong downtrend all year. So this is really, in my opinion, the new chart of truth, because as long as the US dollar is in a really strong uptrend, it's going to be hard to make money swinging stocks or holding stocks for a long period of time. So in this market, in my opinion, you got to be in for a good time, not a long time, as long as the US dollar is in a strong uptrend. The other chart that I look at every day is the TNX. Now, as you know, rates have been going up, and this chart, again, in a really strong uptrend above all the major moving averages. So until we start to see some consolidation in rates or even a breakdown in rates, once again, it's going to be hard to make easy money in this market. So be sure and check out what the US dollar is doing and check out what the TNX is doing before you start buying any of the dips here in the market. That's something we've been telling members about for the entire year, and hopefully it's something that can help you. If you want to find out what else we're up to at StockMarketMentor.com, click the link, take a trial, and maybe I'll see you on the other side.